The first of the month, for most people it's rent, bills, a fresh start. But if you hold XRP, you know it can bring a unique sense of dread. It's the day 1 billion XRP are unlocked from escrow. The fear is palpable and the question is everywhere. Is this massive monthly supply dump the one thing that will forever anchor XRP and stop it from hitting that magic $10 mark? But what if that whole story is wrong? What if the fear is based on a huge misunderstanding of what's going on? Today, we're breaking down exactly what happens on the first of the month. I'm going to show you why this so-called dump is a non-event for the price, and how the supply dynamics, hiding in plain sight, could be the very engine that launches XRP to $10 and beyond. Stick around, because the truth is not what you think. To get the solution, you have to respect the problem, and on paper, the problem looks huge. 1 billion XRP. Every single month. It's a number so big you can't ignore it, and for years it's been the biggest source of fear, uncertainty, and doubt, FUD, in the XRP community. So, where did this come from? Back in 2017, Ripple made a clever move to bring predictability to the market. People were worried that the company, holding a massive bag of XRP, could just flood the market whenever it wanted. To kill those fears, they locked 55 billion XRP, that's 55% of the total supply, into a series of cryptographically secured escrow accounts right on the ledger. The setup was simple and totally transparent. On the first of every month an account expires, releasing 1 billion XRP. This was designed to create a predictable supply schedule, a known upper limit. You can literally go on the XRP ledger and watch these transactions happen. I'm recording this on January 3rd, 2026, and just 2 days ago, the process played out right on schedule. 1 billion XRP, worth around $1.84 billion at the time, was unlocked. Now on the surface, that sounds terrifying. Injecting almost $2 billion worth of any asset into the market should, in theory, cause the price to crater. This is the core of the fear. It's the story repeated in forums and by critics who claim XRP can never hold a high price, because it's constantly being diluted. They paint a picture of Ripple execs mashing a big red sell button, but that picture is pure fiction. This is where we separate the FUD from the facts. That 1 billion XRP headline is designed to grab your attention, but the reality is way less dramatic, and honestly, way more bullish. Of that 1 billion XRP unlocked, a huge chunk of it never gets anywhere near the open market. Historically, Ripple has consistently and immediately relocked most of it into escrow accounts set to expire years down the road. How much? The pattern has been pretty clear. Between 70% and 80% of the tokens are usually sent straight back into deep freeze. For example, in December of 2025, about 70% of the unlocked XRP was immediately returned to escrow. While we wait for Ripple's final report on the January 1st unlock, the on-chain data shows the playbook is repeating. We can see that a majority of that 1 billion XRP, likely between 600 and 800 million, is already being put back into new contracts that stretch out for years. So, right off the bat, the scary 1 billion XRP dump is actually a net release of maybe 200 to 300 million XRP. Still a lot, but a fraction of the headline number. The next logical question is, what happens to remaining amount? Is what's getting dumped on us? The answer is a firm no. This remaining XRP is Ripple's operational budget. It's used for things that build value, like incentivizing ecosystem growth, providing liquidity to strategic partners in their on-demand liquidity, ODL, network, and funding development on the XRP ledger. These aren't market sales to retail investors. They are strategic investments in the network's future. Ripple's entire business model depends on XRP having a high value and deep liquidity. The last thing they would do is sabotage its price. The great monthly dump is a myth. It's a transparent, predictable, and controlled release of a small number of tokens used to grow the network, with the vast majority being re-locked for the long term. The market has priced this in for years. In fact, most serious investors now see the monthly unlock as a total non-event. Now that we've put the escrow FUD to bed, let's talk about the real story. Because while everyone is distracted by the small trickle of supply, they're missing the massive amount of supply that's being pulled off the market. This is where things get really interesting. And it's the true foundation for the path to $10. A supply shock is a simple economic idea. It's what happens when demand for an asset explodes while the available supply of that asset disappears. The result? An explosive upward move in price. The data suggests XRP is heading straight for this scenario. For the past year, we have witnessed a massive sustained exodus of XRP from cryptocurrency exchanges. On-chain data shows that the amount of XRP held on major exchanges has been dramatically slashed. One analyst noted that the supply on exchanges fell from around 4 billion tokens to under 1.5 billion in just 12 months. This isn't a small dip, it's a structural shift. It shows that tokens are moving out of the hands of short-term traders and into the wallets of long-term holders, and crucially, into the vaults of institutions. This is the exact opposite of what the escrow FUD would have you believe. Instead of the market getting flooded, the readily available supply is becoming historically scarce. The market is getting thinner, making it far more sensitive to new demand. Every buy order has a much bigger impact when there are fewer sellers on the other side. That small, controlled monthly release from escrow is a drop in the bucket compared to the hundreds of millions of XRP being systematically pulled into cold storage and institutional products. This brings us to the demand side of the equation. A supply shock only ignites with a spark of demand. For XRP, that spark is turning into an inferno. A tightening supply is only half the battle. To get to $10, you need massive, sustained demand. For years, the XRP community has been talking about what-if catalysts. In 2026, they are no longer theoretical. They're here, and they're happening now. First, and most powerful, spot XRP ETFs. After Ripple's landmark legal clarity in its case with the SEC, the floodgates opened. As of January 2026, multiple spot XRP ETFs are trading in the United States, and their impact is undeniable. These ETFs have already attracted over $1 billion in assets under management, and have shown a relentless streak of consistent net inflows since their debut. Think about what this means. These ETFs act like giant warehouses, pulling hundreds of millions of XRP off the open market and locking them away in regulated custodial vaults. This institutional buying directly fights the net monthly escrow release and aggressively eats into the already shrinking exchange supply. Second, we have unprecedented regulatory clarity on the horizon. The SEC lawsuit is in the rearview mirror. Now, Washington is moving to create a clear, comprehensive framework for digital assets. For instance, the Digital Asset Market Clarity Act, or Clarity Act, is set for Senate committee review in January 2026. This kind of legislation is designed to give clear rules of the road for how banks and major financial institutions can engage with assets like XRP. This isn't just a minor rule change, it's the final green light for conservative, large-scale institutions to jump in with confidence. When banks can hold, trade, and use XRP without regulatory ambiguity, it unlocks a multi-trillion-dollar river of capital. Finally, there's the explosive growth of real-world utility on the XRP ledger itself. With the launch of Ripple's stablecoin, RLUSD, and upgrades supporting things like lending and asset tokenization, the XRPL is becoming a force in real-world finance. This isn't just about speculation, it's about using the technology for what it was built for: fast, cheap, reliable payments and liquidity. With over 300 institutional partners already using Ripple's services, the foundation is set. It's no wonder that analysts at major institutions like Standard Chartered have put out bullish price targets for 2026, citing these very factors. A price of $10 would give XRP a market cap of around $600 billion, a figure that is entirely plausible as it captures even a tiny fraction of the global payments market. So, let's put it all together. The 1 billion XRP monthly release. It's not the price killer everyone fears, it's a misunderstood mechanism where most of the supply gets relocked, and the rest is used to grow the network, not dump on you. The real story, the one pointing to $10, is a story of a massive supply shock. While a predictable trickle of supply comes in, a torrent of existing supply is being pulled off exchanges and locked away by believers and institutions. This is colliding with a perfect storm of demand, relentless buying from spot ETFs, landmark regulatory clarity coming out of Washington, and accelerating real-world use. A move to $10 isn't just a daydream anymore. With the FUD officially debunked and powerful catalysts driving demand against an ever-shrinking supply, it's becoming a logical, data-driven possibility. But that's just my analysis. I want to hear from you. Do you think the escrow FUD is finally dead? What's your realistic price target for XRP by the end of 2026? Drop it in the comments below. And if you enjoyed this no-hype data-driven breakdown, do me a favor and hit that subscribe button and turn on notifications. Thanks for watching.